Okay, so if you've been following along with my trading lately, you know the past week was one of my best weeks as a trader, and I'm on the biggest green streak of my trading career. On Friday, I had 16 green days all in a row with no losing days in between. And so it was a pretty cool accomplishment for me, and I'm definitely pumped for my trading future. And so to break down really how I approached these last few weeks and how I've gone on a green streak like this, that I will add was all streamed live, and so I couldn't fake this green streak even if I wanted to, you have to understand my style of trading. And to break it down, I have a really range-bound, short-biased style of trading. I did get into a few decent long setups like VWAP bounces and stuff like that, but my main focus was on shorting VWAP fades and taking advantage of the range on cannabis and microchip stocks. Those are mostly what I approached these last few weeks, and again, I think that's a huge reason why I went on this green streak to begin with. And so in this video, we're going to break down how I approached these last few weeks and the strategies used to take advantage of these type of moves. Okay, so to really break down how I approach these setups, you have to understand what the range is for most of the stocks I trade. And so today is Friday. I know I'll be uploading this video tomorrow on Saturday, but let's go ahead and break down the opening range of a stock that I traded today, which was CRON. And so the first thing you really want to look at is the low of that opening candle. I usually use that a lot of the time as my risk with VWAP fades and range bound moves, and so I can go ahead and document that here. And again, I'm using the low of that opening candle right here. That's my risk. That's a pretty solid risk level because if it breaks that, a lot of traders are going to be more bullish in their thinking. And so if it breaks that, I can comfortably and understandably get out of the trade. But as long as it maintains under that level, I'll stay in my VWAP fade setup. And the other crucial level to watch with these is the previous low of the day. And so in this case, with this fade right here, we can use this previous low of the day at around 1580. That's a pretty solid risk level that we had a lot of confirmation in. You can see 1, 2, 3 confirmations right before that fade. And so we can be pretty comfortable in that spot. Now, looking at the VWAP fade, this is the one I jumped into right here. And it was a pretty solid move, and I jumped in slowly scaling into it, again, using that low of that opening first candle as my risk, or my stop out level. And so if it breaks that, I can get out of the trade. And if you look at here what my risk and reward is for these type of setups, you can look here and say if you get in the stock at 1595 and you set your risk up here at 1601 or 1602, then your risk is 6 or 7 cents. And if your reward level is all the way down at 1580, your reward is 15 cents. And so you have a 15-cent reward with a 6 or 7 cent risk. And so it's 2 to 1 reward to risk or better in this trade. And that's how you find some consistency in your trading. But again, the range is really what I'm attacking here. And just so I can document this range so you can see what I mean, this is the range I'm really attacking with these type of moves. This range right here. I'm trying to short it at the top and then cover it at the bottom, giving myself a pretty obvious risk level. And so if it breaks over that level here again, I can comfortably get out of the trade because it's breaking out of that range on the upside, which isn't great for me as a short trade. And so that's what you need to understand about these moves is that they're range bound trades, and I'm taking profits pretty quick. Of course, if it breaks under that range and really washes out for me down here, that's even better. But that's not actually the range I'm attacking. I'm just attacking this previous low of the day here because the chances of it at least pivoting back to that previous low of the day are pretty high. And that's how I maintain such a high accuracy rate, especially in the last week, is because again, stocks move in ranges, and when that previous low of the day gets touched, I can comfortably get out of the trade. And so I hope that makes sense. Okay, so now since we went over that, we can go ahead and review my trades from Friday. And again, I jumped into CRON, which is the one I just went over, and I jumped in short. I think my full sizing with this one was 200 or 300 shares max. And so I jumped in short looking to take advantage of that range. And again, I'm using the low of that previous opening candle as my risk and the previous low of the day as my reward. After I entered CRON, you may also notice CGC setting up for the same type of pattern or strategy. And so I jumped in that one as well. I believed I jumped in with 200 shares, but it may have been only 100 shares. I tried to stay patient with both of these, and again, I'm looking to take advantage of that range, and my main reward target is the previous low of the day. And so eventually we got some decent flushes with both of these, and I was able to slowly scale out of these, making just under $60 on the day. And again, I'll definitely take it. This was my 5th green day this week with no losing days and no losing trades total. And so we'll see how I do next week. I just need to scale up a little bit larger in sizing to really take my swing, because when I'm showing this much consistency, I just want to be able to bank as much as possible with it. And again, this week I used 300 or 400 shares, and next week I'd like to get preferably up to 750 or 1,000 shares. So we'll see how that goes. I have a decent amount of profits in my account in order to stay comfortable and not really be worried about going in the red. And so at this point, I just need to take some larger swings and really try to get some decent profit so I can make a withdrawal on this account. And if I do get to do that, I'll make a video about that as well. And so remember, if you're interested in checking out TradeNet, which is the same platform and broker that Mitch and I use, they're one of the ways I can use such small sizing, because both of these trades today on Friday was probably less than $10 in commissions. There's also no PDT rule. You can day trade as much as you want, and there's a lot of other great benefits like a trading course and chat room. Like I said, the intro package is less than $400, and it's a great deal in the trading world, so go check that out, and I'll include that link in the description. You can also check out the TradeNet Challenge, which is completely free to enter, and at the very least you get a free demo account for 5 trading days. And if you do make $500 in net profits while following the rules, you win yourself a free funded account with TradeNet. And so if you want to check that out as well, I'll include a link in the description. So yeah, hit that subscribe button. We'll see if we can keep this green streak alive. Again, this was 16 green days in a row, and it's something I'm super pumped about. And so if you want to follow along, subscribe to our channel, come join us on stream every weekday morning right here on YouTube, and click the like button to help support the channel as well. Good luck in the markets, have a good weekend everyone, and I'll see you all Monday morning.